I'm Noah, the CEO of TractIQ, and I am proud and privileged to be joined by Melissa Shandor and Karen George from StoragePRO. But Melissa and I are going to tag team this really interesting webinar today and show you guys some data that probably never seen before at scale and talk about real implications for occupancy and how to actually use it not just for underwriting, but for operations and everything in self-storage. So we have about 40 minutes today. We're going to run through some slides, probably for the first 20, 25 minutes. We wanted to leave enough time for Q&A towards the end. So if you see a slide or we say something that doesn't make sense or something you really want to dive into, definitely encourage you to type a question into the chat. Karen or one of us could pick it up live during the slide or towards the end. But I think with that, why don't we dive into setting the scene for occupancy data and why it matters? I'll touch on investors and brokers, and then Melissa can touch on owners, operators, and developers. So, why occupancy matters? It's almost like, duh, it matters. If you're in self-storage, this is data that you probably should have always had in the history of the industry. But I think we'll talk about today why that hasn't been the case and how that changes today. But in terms of investors and brokers, whether you are underwriting deals, we can talk about supply per capita. We can talk about demographics. We can talk about rental rates. Occupancy should be right up there in terms of if you're trying to underwrite a pro forma in a market, it is one of the biggest assumptions that drives revenue. It drives NOI, not just for investors, but of course, even for brokers. If you're trying to consult one of your clients, right, should they sell or not? It's one of the most important metrics that you should be considering that you might not have had access to before. Melissa, what about operators and developers?
Yeah, I couldn't agree more about the importance of occupancy. I mean, I think that everybody knows who has a facility that's out there with the doors open and taking in tenants, like you're checking occupancy all the time. The difference now is like, what if you could see your competitors' occupancy? Like, what if you could know how they're performing and compare it to how you are performing at your facility? I mean, you could easily adjust your business plan and you could really make market adjustments that would generate more revenue for you. And for developers, I mean, come on. I mean, this is it. This is what you want. It is literally your lifeline, understanding occupancy and knowing what that market needs and being able to provide the right unit mix. This is going to reduce your lease up time. This is going to save you construction dollars. It just does so many things. I mean, at the end of the day, occupancy is like a diagnostic test. If you went to the doctor's office or to the mechanic, it's going to go through and it's going to identify any areas that you could be improving. So, as with anything, though, there can be some challenges. So, we're going to talk a little bit about, we're going to kind of tag team this one. Noah's going to talk to you about what we've been struggling with as owners, operators, managers, you name it, with accessing the data. And then I'm going to jump in and talk about the problems and challenges associated with leveraging that data. So, Noah, why don't you kick us off and talk about accessing the data?
Well, I'm going to ask you a question.
Okay, I'm in.
Melissa, you've been in storage for a while. Storage Pro is one of the top operators in the United States. How have you guys historically tracked market level or competitor level occupancy data?
It's a struggle, no matter how big you are, your portfolio, because the reality is you can look at occupancy across the properties that you own or manage, depending on what your specific situation is, or you can wait for some REIT reports to come out. But truthfully, the reality is we haven't ever had good access to other people's occupancy data. It's kind of like like so highly desired, but not quite there. So you really just you have to poke around and look at your own portfolio, look at REIT data, and if you're lucky, be able to analyze what's available to you to get a close estimate. That would be what we kind of have to do on our end. It would be great to see everybody's though.
That's right. And I've talked about this on Thaddeus Campbell's podcast and AJ Osborne's podcast, but this is not a you problem, right? This has been an industry problem for the history of self-storage, where we've been flying blind, not just on occupancy, but on things like achieve rates, on stabilized NOI, on expenses for markets across the country. And even if you're the top operator in the United States, like an Extra Space or a Public, right, you might only have 2 to 3 thousand data points. So I think the feedback I've gotten from dozens of the best groups in the country have been we kind of gave up hope on occupancy. And we'll focus on things like let's look at web versus street rates. Let's try to back into what achieve rents are in a market. Occupancy, it's going to be 85, it's going to be 95, you know, whatever. It's not a big deal, right? But that is totally if you could have access to occupancy data, it totally throws all that in the garbage, right? Because this is one of the most important assumptions that you can make as an operator or an investor. So that's at least some of the challenge for accessing the data. You can go to the next slide,
All
and
right, and
I'll
jump into the leveraging part.
yeah, and then the next slide will kind of further set the scene for occupancy, and then kind of release, announce what we've come out with. But yeah, I'll let you take this slide. If you had great occupancy data, you touched on a little bit, how would you leverage that in your day to day?
Yeah, and I think, even if you're an owner of one facility, right, you still should be leveraging what you see on your occupancy reports, right? There's always a way to take data and find some way to have it benefit you. But let's say now we can see the occupancy data of the competing facilities in your market. How can we use it? As an industry, we talk about dynamic pricing. And at its basic level, dynamic pricing is developing a pricing strategy that's based on demand. And, how do you figure out demand? Well, occupancy is a good indicator of that. Ideally, you're performing these ongoing adjustments to pricing, and it's based on what your market and your tenants are doing. So let's say all of your 10 by 20s are full. That means no promos. You could even add preferred pricing to those units. Then you have major vacancies in your 5 by 5s. It's time to roll out a promo plan that makes sense to get those filled up. Imagine if you didn't just have your own personal occupancy statistic report, but you were able to see all the other owners. And that's what we're talking about here. So you're going to make smarter adjustments on promos and pricing. You're going to get an increased cash flow. And for, the developers who may be on call with us, talk about a way to foolproof your unit mix. Now you can see what's going on with occupancy in all these competitor facilities. I mean, you would be able to break down your unit size and know exactly what the demand looks like in your market. And that's just a game changer, truthfully. So I know that many of you try and do your best job when you're planning out these, but I can't imagine one developer that's not looking to save construction dollars, make a better unit mix, and all of that can happen in addition to some reduction in lease up time when you have access to this type of data. So at the end of the day, demand has always been the greatest predictor of cash flow, no matter what industry you're in. And occupancy data gives you access to demand. So normally, we have to rely on the REITs to tell us what's happening in the industry. But Noah, maybe you can tell our amazing friends on the webinar a little bit more about that REIT data and about what could be available to them for the entire market.
Sweet.
Hey,
Let's do it.
Noah, sorry, just before you jump into the REIT, we've had quite a few people join since we started. So just wanted to remind everybody, if you have a question, we will leave time for Q&A at the end, but feel free to go ahead and type it into the chat box and we'll be trying to keep a running list so we don't miss any questions. Back to you.
Thank you,
Thanks,
Karen.
Karen.
All right, I'm going to set more of the scene with this slide, and then the slide after this will be data no one on this call has ever seen. So just setting the scene for what the next slide is. This slide is what we're showing here, historical occupancy across the major REITs since 2017. And just to kind of walk through this, this has been in some of our REIT reports, but each line here is kind of a time series showing, for example, the black line at the top is the REIT's average occupancy in 2021. You can see it was basically above 95% every quarter except for Q4. And then the purple line is 2025's occupancy. You can see how big of a gap there was. My point of bringing up this data is that this data right here has defined the industry's occupancy conversation. When people talk about self-storage occupancy, they will refer to what the REITs are doing. And in reality, you're talking about 6,000 facilities across the US that are the best performing stabilized assets across the top operators, mostly in primary and secondary markets. This data has shaped the entire industry that has closer to 70,000 facilities. And I would argue it's kind of led to this, yeah, 90% occupancy is what we'll stabilize to. In reality, there's so much more sophisticated operators and smaller operators that are performing a lot differently than this, right? Where maybe they run their stores differently instead of in favor of boosting occupancy with lower web and street rates, maybe they'll keep those rates more elevated for higher in-place rents. So this data has shaped the industry in its entirety. Why don't we go to the next slide? So this next slide is the first time we're sharing this nationwide level data. This data is something we released last week where TractIQ, we now track more than 4,000 facilities across the US that have CMBS loans that report their occupancy data to their lenders and which gets filed with the SEC. So this is about 4,000 facilities across the US of occupancy data since 2021. We also get their in-place financial statements, so we can look at achieved rents and stabilized NOI, but that is not the conversation on today's webinar. Today, we're going to talk about occupancy. So you can see here, we broke out the trends of occupancies, looking at it three different ways. The first is looking at that green line, looking at the REITs, right? And we wanted to compare the REIT occupancy, and these are facilities with CMBS loans that are managed by REITs, versus occupancies of facilities that are not managed by REITs. So the red line are facilities that are managed by operators with 15 or more facilities. And then the blue line are facilities that are managed by groups with 14 or less facilities. You can see some pretty stark differences here. And I think Melissa is going to touch on in the next slide economic occupancy and how to think about physical versus achieved rate. But you can see here pretty stark difference between REIT occupancy, which is above 90%, in 2025 for the most part, versus the smaller operators, which is just below the REITs, versus the larger private operators, which is even lower. So some really interesting data, and I'll let Melissa chime in about the economic occupancy side of things.
Yeah, thank you. No, I appreciate that. And I think you're right. We're talking about the difference between physical and economic, right? So you got to look at the factors, when you're running a self-storage facility, you got to look at the factors that are impacting your occupancy. And physical occupancy, I think we all know on the call that it's limited. Like it doesn't tell you what tenants are paying versus ones that may be delinquent. It's not telling you, like, are your tenants paying market rates? It's not really giving you any insight into the financial health of your business. Where economic occupancy is comparing, your rents collected with your gross potential rent. So it's really a true revenue potential when you're looking at economic. It's going to expose any type of management or operational inefficiencies you may be having. It's going to tell you if you're leaving money on the table. Because this gives you like a full insight into your, financial health of your business, we really need to be looking as an industry always at the economic occupancy versus the physical occupancy. And then, truthfully, for these development projects, as you know, like the time to lease up, it's always on your mind, right? You're always thinking about it. So many people, we don't do this at StoragePRO, but many people will try and like create a model showing like a physical lease up. But an economic lease up is far more important. When we model out our projections, we're not looking to fill up units. Because truthfully, like if you're at very high physical occupancy, you may not be actually generating the right revenue. So you can't look at this as an individual metric. So we look at things like factoring in demand. How should we use our promos? When and how should we apply our ECRIs? And we're going to look to maximize gross potential income because the focus is going to be on this economic occupancy versus physical. And of course, we all know there's predictors. So what are the predictors in your market? Like for the owners, investors, developers, like you got to be considering longevity, turnover. Are you in a military town? Are you by a university, right? That's going to change your churn. Are there new employers coming into your market or maybe even leaving your market? Fun side note for all of our friends on the call, NOAA and TractIQ actually has housing and CRA development data. Personally, I use it all the time to gain better insight into what's happening in market. For example, I go on, if I see local schools are expanding, that means they have more students. More students mean more people, more future tenants. Like there's a lot more to the story. And I absolutely love that. That's another thing that TractIQ can give me data on. Some other great resources, if you're looking for other options, are to look at local planning and development. You can reach out and look at county clerk data. You can look at any local news sources, but understanding these occupancy predictors will really help you to be more successful. And, knowing what is there is great, but knowing what is coming really sets you apart from your competition. So now we've kind of talked about that. Now I'm going to kick it back to you and talk about these REIT occupancy strategies, like examining a couple of these REITs that we all know by name. Like, what is it they're trying to do when it comes to occupancy?
Yeah, I appreciate that summary. And I'll just add to your point earlier about the importance of demand drivers in a market. All of those things are true, but also understanding verified operating performance at scale across all these facilities for the first time, which includes occupancy, can help us all make better predictions in terms of what a market can sustain, what achieve rates you can get, and things like that. In terms of, we're going to look at Extra and CubeSmart in the next few slides and just kind of set the scene here. So what you've got here is since 2020, this is Extra Space's achieve rates versus their street rates. And what you can see here is there's a couple things going on here, especially with the Life acquisition in 2023, 2024. But you can see here the strategy, how Extra Space, they lowered street rates pretty significantly as storage demand fell in favor of keeping their occupancies high. So you can see here there was a pretty big gap between street versus achieve rates back in 2023, 2024, and it caused all sorts of issues from underwriting to operations, things like that. But this was a strategy employed to make sure occupancy, physical occupancy, was maintained. I want to go to the next slide,
Sure
Melissa.
thing.
What is the difference between CubeSmart and Extra Space? You can see it's the same chart, but a different kind of strategy here, right? You can see here versus Extra Space, CubeSmart's street rates, they did fall from their peak in 2021 and 2022, but you can see that for the most part, their street rates were always higher than the achieved. And then I'm getting in the weeds here, but just to set the stage, I view self-storage having three kinds of rates. The first is your street price, which is typically crossed out to then see the web price. So the street price would be the rental rate if you were to walk in off the street. The web price would be your rental rate if you were to rent a unit online. And then your achieved rate would be the average rent that the customer is actually paying at the facility. So you can see the differences between Extra and CubeSmart. And again, another issue with the industry is that the only reliable data we have had to understand how competitors are operating is we've had 5 groups and maybe your own portfolio. Now, as part of the release, we have dozens and dozens of groups and true visibility into achieve rates and occupancy for the first time. So, Melissa, I'll turn it over to you in terms of how you think about a strategy in terms of setting rates and ECRIs and all of it.
Yeah, thank you. Appreciate that. So, you know, we can look at the REITs, and REIT strategies are just that. They're strategies that are developed when considering their entire portfolio, their debt to income ratios, investor expectations. In most cases, this is not the best fit, for operators that are not operating thousands of facilities across the country. So, filling up a facility quickly and using aggressive ECRIs, it may work for extra space. But for you, it could lead to higher turnover, delinquencies, negative online reviews. And nobody really wants that when you're trying to operate a successful facility. And, with you trying to do pricing over achieve rates, yikes. I mean, I wouldn't recommend, but for developers, I'll tell you, this is going to delay your lease up. And when you're trying to recover investment dollars, who's trying to delay their lease up? Not nobody that I've ever worked with. So, owners, developers, investors, you should consider creating a customized strategy. This is going to be based on your facility or facilities, your market, the goals you have for your business. This is always going to net you better results at the end of the day. Successful owners try and balance occupancy with pricing, and they try and capitalize on demand. They plan out their ECRIs, they tailor their promotions, and this preferred pricing for the units that are in higher demand, it is definitely underutilized across the industry, but a great way to generate some more revenue. So let's take a quick look at a little graphic we have for you about some other components of this idea of a customized strategy. When we're talking, customize, I'll tell you, I'm not a fan of one size fits all. I don't think it works. And, owners need flexible strategies. They have to meet their unique needs. And when you take that dynamic pricing, including the promos, the ECRIs that we already discussed, and then you start combining in things like data-driven marketing, reputation management, community engagement, tenant loyalty, retention, all these great things. What's going to happen is you're going to have a plan that's set up automatically to succeed because it was customized just for your success. So we're going to take a quick peek at two StoragePRO facilities just as an example. So this first one, this is a West Coast facility. It's a California base, and our home office is based in California. And so it's comparing like market occupancy versus StoragePRO occupancy. And you can see that this facility has performed very well and has stayed above market occupancy. It's currently around 94.7%. What we needed to do in order to manage this facility well was to implement proactive revenue management. I mean, we scrape rates daily. That's important. But if you're an individual owner, like you have to look at, like, do I have operational consistency in place? Have I standardized my procedures? And if you're really trying to outperform others in your market, you have to be looking at regular data-driven rate adjustments. It comes down to that. You're going to have to pull them and look at them to really be able to push out the results you want. And if you want tenant loyalty, you got to pay attention to those online reviews, right? So we know those matter. And that does help when it comes to keeping your occupancy high because people are looking at those stars when they're making decisions. But add in some targeted PPC ads and, you look at all these things together. And that is how we were able to take this facility and be performing higher, obviously, than market. But, everybody's not on the West Coast, myself included. I'm on the East Coast. So let's take a quick peek at an East Coast property. So this is an East Coast property that we took over. It's based in Connecticut. And this facility was originally a lease up. We took it over in January of 2025 as part of an acquisition. And you can see kind of they had hit a plateau. Great facility, but they had hit a little bit of a plateau and they were just hovering around that 85%. So our goal was obviously to get them higher and to eventually get to, stabilization when we're looking at economic occupancy. So we implemented like strong on-site execution when it came to like following up on leads. We did better delinquency management. They need some help and growth there. We streamlined auctions. And so we were really ready and prepared to backfill because we knew when expected move-outs were going to happen. We standardized every process we could. And truthfully, we just applied a lot of oversight to what was going on with occupancy so we could just support revenue growth for them. And as you can see, this facility is doing great now. They're at 95.7% occupied. And, we've gotten past that plateau and beyond.
Can I
So,
just jump in really quick, Melissa?
sure.
These last two slides, I think, highlight StoragePRO and how well you guys have been able to do versus the market. I just want to quickly shout out that when we talk about market occupancy in this example, this is like the hyper local occupancy of the competition that Storage Pro faces in these areas. And I think this is probably the first time you've ever been able to do a chart like this for these two facilities to actually see how you compare to your competitors as well, both
Yeah.
on the occupancy and on achieve rates.
Yep, 100%. And for those of you on the webinar, like what Noah just said could not be more true. We look at our portfolio and, obviously we still have this plan to improve occupancy, generate more revenue, increase cash flow, all those great things that owners love. But at the end of the day, like I was able to let Noah give me a deep dive because now he's got access to this data and see what our competitors doing. And trust me, it's great to see that red line above the blue line. Like we were excited to see that our results aren't just something that we felt like we were doing. Like this is the data to prove it. But until this point, no one but no one had the information. Now we thankfully have on TractIQ that has the information for us. So, I do appreciate you asking that. And I'd like to kick it back to you just to discuss a few more factors that impact occupancy and kind of look at, what the REITs are saying and when they put out their reports.
Sure. So, and I'll have a question for you
Oh,
in
okay.
terms of
I love
actually, let me have a
questions.
question. Let me have a question for you for that last slide.
Okay, let's go back.
When you are providing projections to investors and operators, like the conversation with them historically, have they just trusted that Storage Pro is going to deliver on like have you ever been able to like show them a chart like this to understand how you're actually doing versus the competition? And even potentially like I view these two slides as okay, like you're clearly outperforming the market. We should hire you guys as the third party. I'm curious how you think about that.
Well, the truth is no. Like we've been able to explain our services and we've been able to show them what we can do. And we do that all with our performer tool our sales team loves talking with owners. So this is kind of what we've done in the past, but we've never been able to hand them data and say, well, let me show you in this market how we perform against everybody else. So it's a huge advantage for us as property managers. I'll tell you right now, that's a massive advantage that you're providing with being able to have this data because it speaks volumes. But again, like prior to now, no one was able to pull this data together for us. So I am super thankful and excited to be able to utilize things like this when we are talking to owners. But I'm even more thankful that you guys have, you know, uniquely found a way to pull in this data into your software and make it available to all of us.
Awesome. Well, I think we have really two quick slides left. And in
Yep.
terms of like factors impacting occupancy, I think you almost hit on all of them. I'll just highlight a couple of things from three of the big REITs. The first is that extra space, you know, customers who actually rent storage due to a lack of space stay on average about 15 months versus folks who are moving rent at half the duration. So that's just really interesting. I know we talk as an industry about housing and mobility and all that kind of stuff, but there's certain kinds of tenants that are, the best tenants to try to attract for your facility. CubeSmart, just talking about churn, about 4 to 5% of their portfolio, moves out on it per their earnings call. And then in terms of Public Storage, talking about stabilization, I'll just note like this depends on the size of the facility and the market, right? Public Storage is mostly developing in the primary markets with the larger multi-story Class A kind of developments. But, now talking about stabilization periods of 3 to 4 years, which is significantly longer than in periods before this. So just some interesting takeaways from the REITs. And I think with that, we just have some final thoughts before we get into any questions that folks have.
Yeah, we're about at the end, folks. So you can put in all your wonderful questions into the chat now, and Karen will be navigating those for us. And of course, we're going to try and answer every single question you have. But I will just touch on one thing, like accounting for churn really does help. And truthfully, that's how we were able to move the needle with our California facility is we're preparing for those things. But yeah, I would agree, like knowing this churn rate is essential. So we're on this call, everybody logged in for the same reason. Like we want to make smarter self-storage decisions. Who doesn't want to be smarter, obviously? And so, these are some like, high level bullets that we kind of put together. And, Noah, you and I can tag team these. I don't know. We know everybody
I think
can
we should just go
read.
right into the questions, and
Yeah, I think
because
you all
there's a
can.
couple.
Perfect. You guys can all grasp these. I'm going to put our pretty faces and contact information up there while we're answering these questions. And Karen, you let us know if it's for one of us specifically or for both, whatever works with the question. And thank
Sure.
you all for submitting.
Yep. So I'm going to read through these. I am tracking them. Just Melissa and Noah, if you're looking, there's questions in both the Q&A and the chat. And just a heads up to attendees, the Q&A is always, not always, but usually the sometimes the richest part of the discussion. So stay on and listen to the answers to these. And before you jump off, at the very end, I've got just a 5 question yes or no poll. If you would stay on, I'm going to launch that at the end. That just gives us great feedback on, what to do differently in the future and other areas that you're interested in. So, with that out of the way, Noah, if occupancy data was pulled, was achieved rate data pulled as well? And will that be something tracked and available on TractIQ in the future?
Absolutely. We don't just get occupancy data for all of these facilities. We actually get their full financial statements, which include gross potential rent, vacancy, and rental income to get economic occupancy, and even rental income, which you could use to get a cheap rent per square foot. And then all of the expense line items, taxes, insurance, R&M, payroll, NOI margins, year over year changes for all of these facilities. So it's not just occupancy, it's their entire financial picture.
Great. The next question is, how does your S/W get street rates and other data for Class C properties not owned by large multi-market REITs? I'm brand new and very local at this point.
Yeah, I think Jerry, we might have spoken before, but I think, we scrape rates every day. And, when you say Class C properties, probably in a secondary or tertiary market, if the competitor is posting their prices online, that is how we're going to be able to extract their rental rates. I'll note on like the in-place financials and occupancy, like we're getting that because these facilities have CMBS loans. Those tend to be more in the primary and secondary markets, but we track in all the markets across the country.
Great. Camille asked, how does TractIQ get information on occupancy of competitors? Is it totally accurate?
Thank you, Camille. Yeah, these are all facilities that have CMBS loans. So effectively, every month or every quarter, these borrowers report their financial position to their lenders, and then that gets filed as part of an SEC filing. And these are all public securities. And we've partnered with a licensed broker dealer of CMBS data called CredIQ to get accurate. To get this data, I would say they're either lying or making an error to their lenders or their investors, or it's correct.
Yep. I'm going to jump over to the chat. John was very patient. He asked this a while ago. Is this included with the SSI members and recent price increase for your service?
Huh. Thanks, John. I will give us 2 weeks. I'll come back to you in 2 weeks on some SSI stuff. And then just because I saw Jerry's question, CMBS stands for Commercial Mortgage-Backed Security Loan. So it's a type of loan. Traditionally, it's a non-recourse loan that, the sophisticated or well-heeled borrowers are able to get. And I would encourage folks, you can find a debt broker or a lot of lenders who specialize in this space, but it's a kind of loan.
Susan paid you a nice compliment. She said, this is groundbreaking for the storage industry. Will this also be available in Canada?
To our Canadian friends, we will see. I wouldn't say we have immediate plans to move to Canada. Melissa, do you guys operate stores in Canada?
No, we don't currently have any in Canada, but we love Canada. We're equal
Um,
opportunity here at StoragePRO.
There you go.
One asked, is this data available to extract programmatically?
Yes. And whoever asked that question, I guess, yeah, Juan, feel free to reach out to us. It's able to be extracted programmatically. I don't know entirely what you mean by that, but yes.
Well, and as a user of TractIQ, I will tell you that one of the things that's great about it is the ability to just download the data that you need, right? So you can just go on there, put in your metrics, whatever you want to see, whether it's market, whether you want to put radius circles, drive time, you name it. You can actually analyze like opportunities and say, I only want to see facilities that are this size, or this is their rental rate. Um, and then from there, once you do it, I mean, all of that data, when you're a Track IQ person, you can just download. So we do this all the time. Like we could not go through and project out for owners what we think that they're going to make without access to rental information, right? So we go in and Track IQ gives us a great rental comp report that we can just download that data. So if that's what you're looking for, like, can you look at it where it's not like you have to look at each individual one, where you can just export out large amount of data and analyze it? The answer to that as a user is 100% yes.
Got another nice compliment from Thomas. Great work, guys. How often will this data be refreshing?
Hey, Tom. It will be refreshing every month, but it depends on when the borrower reports to their lender. Some will report every quarter, some will report every month. So it really just depends on the borrower, but we will be updating it every month to allow for any bizarre reporting, schedules that people have. We'll make sure to update that.
And to that end, Nicole asked, how often are you reviewing occupancy for a facility? So, um, I guess that could be for both of you.
Melissa, I'll let you take that.
Yeah, depending on what you're asking, I would say, if you're an owner operator, like you should be looking at occupancy all the time, at least monthly. I mean, you should be pulling your reports. If not, looking at it periodically throughout the month. The more you look at it, the more you can track the trends. Now, if you're talking about, hey, I want to be looking at other people's occupancy, I think the answer is a little bit different, but not that far off. I mean, if you're trying to compete with people, you got to see what they're doing. And, we go on and we look at people's rate adjustments, but being able to see occupancy changes and see like, oh, it looks like my competitors just filled up all these units, right? That gives you a better plan for your own facility and what's going to happen with your units. So, I don't know if that's 100%. You can type more in there if you want to. If I didn't quite answer it, or maybe no one wants to expand on it a little bit more.
Yeah, I think, it depends on the kind of market you're in, the kind of facility you have, and what your goals are. I mean, historically, you probably just haven't had any occupancy data across your competition. And the status quo has been let's look at their rates and do revenue management and all that kind of stuff. I think now there's a lot that I think we've seen of how this changes how people operate, right? I mean, if you've never had access to this data, but now you can, like, who knows how often you're supposed to look at it, right? I think the best operators like StoragePRO, right? You can see they're already looking at their sites versus the market, right? And already not are only using this for, potential new business that they can show potential customers how well they're doing, but also to make sure their future underwriting is dialed in, their future rate setting and promotions and all that factors in, data that of course is highly important, but just never been accessible before.
And a couple of different people have asked where you can find this occupancy data in TractIQ.
Yeah, I would encourage you guys to book time with us if you haven't already, because it's in our product. And I do see another question. I'd love to show Melissa if I'm able to share my screen of what a financial statement looks like, and kind of I don't know if that's legal in this webinar.
If it's not, it's Tract IQ that you want to remember the name of. If it's not legal, not my name. Um, sure. If you say so, Noah, I can stop sharing and let you share. If it won't let you, will it let you override my share?
Well, let's see. Can you all see
Hey,
Let's
this?
see.
Noah,
Try and take.
before you do that, we had one other one. What about RV and boat storage?
We currently focus on traditional self-storage. So that means if it's a traditional self-storage facility with boat and RV, we would have that data. But and then actually the CMBS loans, we do have data on facilities that are boat and RV if they have a CMBS loan, but it is not our focus today. We want to be remain hyper focused on traditional storage for the time being.
Great.
Just to kind of show you guys this data for a quick second, since I think it's easier to show you, I'm just going to pull up Dallas for a second and kind of show you what we're talking about here. So what's on the screen now is a sample self-storage facility that I hid the name because it's a real facility, but someone asked, how do you get gross potential rent and things like that? So we don't just get occupancy, we're actually going to get their financial statements for these facilities. So you'll be able to see some of them report gross potential rent, vacancy collection loss, and rental income. We'll show the total income, each expense line item, taxes,
Oh,
insurance. Yeah.
Noah,
Yeah.
sorry to interrupt. Somebody wrote, we're not seeing Noah's screen, still on Melissa's.
Okay, let's give that a try. How's that, people? Can we see it now? Hopefully, thumbs up it if you can see what you need to.
Thanks, Cecilia. Can you see it? Oh, okay.
Perfect.
They can see it now.
Okay, great. So, yeah, like I was saying, you'll be able to see the actual facilities financial position for, you know, up to 2025 and really dive into the future or historic performance of a site and then be able to see occupancy data at the facility level. Let's actually totally black this out for a second. So we're in Dallas. This isn't recorded, so it's all good. But you'll be able to see like facility level occupancy data for thousands of facilities across the US since 2021.
So, Noah, we had another question. I think the person's trying to figure out do you have some sort of percentage of how many facilities, I guess, have CMBS debt on them? The question was, isn't the occupancy data only coming from CMBS debt? How much of the market is this really?
Yeah, great question. It's about $40 billion of assets. And just to contextualize it, we actually have the appraised value of all these facilities because these were loans. So $40 billion of assets. In the context of storage, we just did a market valuation of storage, estimating the value of the asset value of storage at about $450 million. So I'd think about it as, anywhere from 10 to 20% of the facilities in the US. This is more facilities than Extra Space. They have $29 billion of assets, and is probably more than everyone on this call had access to before this, right? Which was zero. So it's not 100% coverage, and there's a lot of challenges of getting operators to share data and things like that. But yeah, that's a little bit about the coverage.
Yeah, and I'll just put a side note in there really quick. Like, what a great idea. Like, whether it was yours, Noah, your teams, or whatever. But I mean, this is like really thinking outside the box. Like, how can we bring something better to the market? So, big thank you for thinking outside the box and coming up with this. We're so excited to have access to this at Storage Pro.
Love it.
So with that, I think we've answered all of the questions. Thanks to everybody that stayed on. And again, if you valued this information and would just do us the favor of taking this 5 question yes or no poll, I'm going to pop it up on the screen. We would really appreciate the feedback. And then after that, you guys are free to go. Thanks so much.
Yeah. And
Yeah.
I'll just share yes, the slides will be shared and the webinar will be shared, but I just want to thank Melissa, you in particular, and Karen for the opportunity here. This is awesome and definitely want to do more of these in the future as we understand more about the data and think very highly of you guys. So really appreciate you helping organize this.
Yeah, no, we were excited to partner together. And listen, at the end of the day, we all want to be value add and support this industry. All of us that are in self-storage, we are our own unique special group slash family. So hopefully everybody found this value add. Obviously, Noah and I's information's here. Please reach out to either one of us if you need anything. And as Karen said, thank you so much for your consideration on taking her poll at the end. It's super fast, but it really does help us provide you more value add information in the future.
It might be the greatest poll of all time, so definitely encourage you to fill it out. But appreciate everyone for hopping on and excited to continue growing this year together. Melissa, Karen, do we hang on here or we're good?
You're muted, Karen.
I think you can jump off. I'm going to stay on until we get the
Great.
bulk of the poll results.
Well,
Okay, well, we're excited to see what people have to say. I'm really
Yeah.
excited now that I'm seeing that people are, excited about occupancy information. So thank you all again. We appreciate you and let us know if we can give you any more information.
all right. Thanks, everyone. Have a great day.